Chapter 4: The Sound of Credit, Building and Maintaining a Solid Credit Score. Understanding the importance of credit in personal finance. Steps to establish and improve creditworthiness. Navigating the world of credit cards, loans, and debt management. Section 1: Understanding the importance of credit in personal finance. Explaining the role of credit in various financial transactions, such as obtaining loans, renting an apartment, or applying for insurance. Highlighting the significance of a good credit score in accessing favorable interest rates and financial opportunities. Discussing the long-term impact of credit history on financial well-being and future financial goals. In personal finance, credit plays a vital role in various financial transactions and can significantly impact an individual's financial well-being. In this rhythm, we will explore the importance of credit, explaining its role in different financial scenarios. We will highlight the significance of a good credit score in accessing favorable interest rates and financial opportunities. Finally, we will discuss the long-term impact of credit history on financial well-being and future financial goals. Role of credit in financial transactions. Explain how credit is involved in various financial transactions. Loans. Credit is essential when applying for loans, such as mortgages, auto loans, or personal loans. Lenders assess creditworthiness to determine the borrower's ability to repay the loan. Renting an apartment. Landlords often consider an applicant's credit history to evaluate their reliability in paying rent on time. Insurance applications. Some insurance companies use credit information as a factor in determining premiums for policies like auto or homeowners insurance. Significance of a good credit score. Highlight the importance of having a good credit score. Access to favorable interest rates. A good credit score demonstrates creditworthiness and can lead to lower interest rates on loans and credit cards. Financial opportunities. A strong credit history can open doors to financial opportunities, such as higher credit limits, better credit card rewards, or favorable terms for borrowing. Rental and housing prospects. A good credit score improves chances of securing rental agreements or obtaining favorable mortgage terms when purchasing a home. Long-term impact of credit history. Discuss the long-term implications of credit history on financial well-being. Future borrowing capacity. Credit history influences future borrowing capacity. A positive credit history builds trust with lenders and increases the likelihood of being approved for future loans. Employment prospects. Some employers review credit reports as part of the hiring process, particularly for positions that involve financial responsibilities. Impact on financial goals. Credit history affects the ability to achieve future financial goals, such as starting a business, pursuing higher education, or saving for retirement. Building and maintaining good credit. Offer guidance on building and maintaining good credit. Paying bills on time. Consistently paying bills by their due dates helps establish a positive credit history. Managing credit responsibly. Use credit cards and loans responsibly by keeping balances low, paying off debt, and avoiding excessive borrowing. Regularly checking credit reports. Monitor credit reports for errors or fraudulent activity and take steps to rectify any inaccuracies promptly. Limiting new credit applications. Excessive credit inquiries can negatively impact credit scores. So it's important to be selective when applying for new credit. Understanding the importance of credit in personal finance is crucial for building a strong financial foundation. Credit plays a significant role in financial transactions, access to favorable interest rates, and various opportunities. A good credit score opens doors to financial benefits and contributes to long-term financial well-being. By responsibly managing credit, paying bills on time, and regularly monitoring credit reports, individuals can build and maintain good credit, positioning themselves for financial success and achieving their future financial goals. Section 2: Steps to establish and improve creditworthiness. Guiding readers through the process of establishing credit for individuals with little or no credit history. Discussing strategies to build positive credit history, such as obtaining a secured credit card, becoming an authorized user, or taking out a small loan. Offering tips on responsible credit utilization, including making timely payments, keeping credit balances low, and avoiding excessive credit applications. Establishing and improving creditworthiness is a crucial step in personal finance. In this rhythm, we will guide readers through the process of building a positive credit history, particularly for individuals with little or no credit history. We will discuss strategies to establish credit, such as obtaining a secured credit card, becoming an authorized user, or taking out a small loan. Additionally, we will offer tips on responsible credit utilization, including making timely payments, keeping credit balances low, and avoiding excessive credit applications. Establishing credit for individuals with limited or no credit history. Address the challenges faced by individuals with little or no credit history. Secured credit card. Explain how a secured credit card works. Where a cash deposit serves as collateral. Regular, responsible use of a secured credit card helps establish a positive credit history. Authorized user. Discuss the option of becoming an authorized user on someone else's credit card. This allows individuals to benefit from the primary cardholder's positive credit history. Credit builder loan. Explain how a credit builder loan works, where funds are deposited into an account, and payments are made to build credit history. Once the loan is repaid, individuals can access the funds. Strategies to build positive credit history. Offer strategies to build a positive credit history. Timely payments. Stress the importance of making all payments, including credit card bills, loan installments, and utility bills, on time. Responsible credit utilization. Encourage individuals to keep credit balances low in relation to their credit limits. Aim for a credit utilization ratio below 30%. Diverse credit mix. Explain that having a mix of different types of credit, such as credit cards, loans, and installment accounts, can contribute to a positive credit history. Responsible financial behavior. Emphasize the significance of responsible financial habits, such as avoiding defaults, bankruptcies, or excessive debt. Tips for responsible credit utilization. Provide practical tips for utilizing credit responsibly. Make timely payments. Emphasize the importance of paying all bills and credit obligations on time to avoid late payment penalties and negative impact on credit scores. Keep credit balances low. Encourage individuals to keep credit card balances low to maintain a healthy credit utilization ratio. Avoid excessive credit applications. Explain that frequent credit applications can raise red flags to lenders and potentially lower credit scores. Encourage individuals to apply for credit only when necessary and be selective in their choices. Regularly monitor and review credit reports. Encourage readers to monitor and review their credit reports regularly. Obtain free annual credit reports. Inform readers about the availability of free annual credit reports from credit bureaus. Reviewing these reports allows individuals to identify any errors or discrepancies that may negatively impact their creditworthiness. Address inaccuracies promptly. Instruct individuals to dispute any errors on their credit reports and follow up with credit bureaus and creditors to rectify the inaccuracies. Establishing and improving creditworthiness requires intentional efforts and responsible credit utilization. By taking steps to build positive credit history, such as obtaining a secured credit card, becoming an authorized user, or taking out a credit builder loan, individuals can establish credit even with limited or no credit history. Responsible credit utilization, including making timely payments, keeping credit balances low, and avoiding excessive credit applications, further contributes to building and maintaining good credit. Regularly monitoring and reviewing credit reports allows individuals to identify and address any inaccuracies promptly. By following these steps and adopting responsible credit habits, individuals can enhance their creditworthiness and open doors to future financial opportunities. Section 3: Navigating the world of credit cards, loans, and debt management. Providing an overview of different types of credit, such as credit cards, personal loans, student loans, and mortgages. Discussing the pros and cons of each type of credit and offering guidance on choosing the most suitable option. Addressing the importance of responsible debt management, including creating a repayment plan and prioritizing debt repayment. In personal finance. Understanding the various types of credit, such as credit cards, loans, and mortgages, is essential for effective financial management. In this rhythm, we will provide an overview of different types of credit, discussing their pros and cons. We will offer guidance on choosing the most suitable option based on individual needs and circumstances. Additionally, we will address the importance of responsible debt management, including creating a repayment plan and prioritizing debt repayment. Overview of different types of credit. Introduce various types of credit. Credit cards. Explain how credit cards allow individuals to make purchases on credit, with the option of paying the balance in full or making minimum monthly payments. Personal loans. Discuss how personal loans provide a lump sum of money for various purposes, such as debt consolidation, home improvements, or major purchases. Student loans. Explain how student loans are specifically designed to finance education expenses and offer different repayment options. Mortgages. Discuss how mortgages are long-term loans used to purchase or refinance a home, with various terms and interest rates available. Pros and cons of each type of credit. Discuss the advantages and considerations of each type of credit. Credit cards. Highlight the convenience and potential rewards or cashback benefits, but also mention the risk of high interest rates and potential for overspending. Personal loans. Explain the flexibility in use and potentially lower interest rates compared to credit cards. But caution about the need for responsible borrowing and repayment. Student loans. Discuss the accessibility to education, potential tax benefits, and various repayment options, but emphasize the importance of considering the long-term impact on finances. Mortgages. Address the benefits of homeownership and potential tax advantages, but also discuss the responsibility of monthly mortgage payments and the long-term commitment involved. Choosing the most suitable credit option. Offer guidance on selecting the most suitable credit option. Assess individual needs. Encourage readers to assess their specific financial goals, the purpose of borrowing, and their ability to repay the debt. Consider interest rates and terms. Explain the significance of comparing interest rates, fees, repayment terms, and any potential penalties associated with each credit option. Seek professional advice. Encourage individuals to consult with financial advisors or loan officers to gain insights tailored to their circumstances. Responsible debt management. Address the importance of responsible debt management. Create a repayment plan. Emphasize the importance of creating a realistic repayment plan, considering income, expenses, and other financial obligations. Prioritize debt repayment. Encourage individuals to prioritize high-interest debt and make additional payments whenever possible to reduce overall interest costs. Avoid excessive borrowing. Advise readers to borrow only what is necessary and avoid taking on excessive debt that may strain their financial situation. Seek help if needed. Encourage individuals to seek assistance from credit counseling agencies or financial professionals if they are struggling with debt management. Navigating the world of credit cards, loans, and debt management requires understanding the pros and cons of each type of credit and choosing the most suitable option based on individual needs. Responsible debt management, including creating a repayment plan and prioritizing debt repayment, is crucial for maintaining financial stability. By considering individual circumstances, comparing interest rates and terms, and seeking professional advice when needed, individuals can make informed decisions about credit options. With responsible borrowing and proactive debt management, individuals can use credit as a tool to achieve their financial goals while maintaining a healthy financial outlook. Section 4. Understanding credit reports and scores. Explaining how credit reports and credit scores are generated and their significance in evaluating creditworthiness. Discussing the key factors that influence credit scores, such as payment history, credit utilization, length of credit history, types of credit, and recent credit inquiries. Offering strategies to monitor credit reports, identify errors, and dispute inaccuracies. Credit reports and credit scores play a vital role in evaluating an individual's creditworthiness. In this rhythm, we will explain how credit reports and scores are generated and their significance in assessing financial credibility. We will discuss the key factors that influence credit scores, including payment history, credit utilization, length of credit history, types of credit, and recent credit inquiries. Additionally, we will provide strategies to monitor credit reports, identify errors, and dispute inaccuracies. Generation and significance of credit reports and scores. Explain the generation and significance of credit reports and scores. Credit reports. Describe credit reports as detailed records of an individual's credit history, including credit accounts, payment history, public records, and inquiries. Credit scores. Define credit scores as numerical representations of creditworthiness, derived from the information in credit reports. Emphasize their importance in determining loan approvals, interest rates, and overall financial credibility. Key factors influencing credit scores. Discuss the key factors that influence credit scores. Payment history. Explain that timely payments positively impact credit scores, while late payments or defaults can have a negative effect. Credit utilization. Describe how credit utilization, the percentage of available credit used, affects credit scores. Encourage individuals to maintain a low credit utilization ratio. Length of credit history. Explain that a longer credit history generally leads to higher credit scores, as it provides a more extensive track record of financial responsibility. Types of credit. Discuss the benefits of having a mix of credit types, such as credit cards, loans, and mortgages, as it demonstrates responsible credit management. Recent credit inquiries. Explain that multiple recent credit inquiries may negatively impact credit scores, as it may indicate a higher risk of financial instability. Strategies for monitoring credit reports. Offer strategies to monitor credit reports. Annual credit reports. Encourage individuals to obtain free annual credit reports from credit bureaus to review their credit history, accounts, and personal information. Credit monitoring services. Discuss the option of subscribing to credit monitoring services that provide regular updates and alerts about changes in credit reports. Identifying errors and disputing inaccuracies. Provide guidance on identifying errors and disputing inaccuracies in credit reports. Reviewing credit reports. Advise readers to carefully review their credit reports for any errors, such as incorrect personal information or accounts they do not recognize. Disputing inaccuracies. Explain the process of disputing errors by contacting the credit bureaus in writing, providing supporting documentation, and requesting corrections or removal of inaccurate information. Understanding credit reports and scores is crucial for evaluating creditworthiness. By comprehending how credit reports and scores are generated and the factors that influence credit scores, individuals can take proactive steps to maintain and improve their creditworthiness. Regularly monitoring credit reports, identifying errors, and disputing inaccuracies contribute to maintaining accurate credit information. With this knowledge and the ability to navigate credit reports effectively, individuals can take control of their financial credibility and make informed decisions to achieve their financial goals. Section 5. Building healthy credit habits and maintaining a solid credit score. Discussing the importance of responsible credit habits, such as making timely payments, keeping credit utilization low, and avoiding excessive debt. Providing tips for managing credit responsibly, including setting up payment reminders, automating payments, and regularly reviewing credit reports. Addressing the potential pitfalls and risks associated with credit, such as credit card debt, predatory lending, or identity theft. Building healthy credit habits and maintaining a solid credit score is essential for financial stability and access to favorable credit opportunities. In this rhythm, we will discuss the importance of responsible credit habits, provide tips for managing credit responsibly, and address potential pitfalls and risks associated with credit. By developing and maintaining healthy credit habits, individuals can establish a solid credit history and improve their overall financial well-being. Importance of responsible credit habits. Emphasize the significance of responsible credit habits. Timely payments. Explain the importance of making payments on time to demonstrate financial responsibility and avoid negative impacts on credit scores. Low credit utilization. Discuss the benefits of keeping credit utilization low, ideally below 30%, to show responsible credit management and avoid overburdening debt. Avoiding excessive debt. Highlight the risks of accumulating excessive debt, which can lead to financial strain and impact credit scores negatively. Tips for managing credit responsibly. Provide practical tips for managing credit responsibly. Setting up payment reminders. Encourage individuals to set up payment reminders, either through their bank or using mobile apps, to ensure timely payments. Automating payments. Discuss the benefits of automating minimum payments or full payments to avoid missing due dates and incurring late fees. Regularly reviewing credit reports. Encourage individuals to review their credit reports regularly to identify any errors, unauthorized accounts, or suspicious activities. Addressing potential pitfalls and risks. Discuss potential pitfalls and risks associated with credit. Credit card debt. Explain the risks of accumulating high-interest credit card debt and the importance of paying off balances in full whenever possible. Predatory lending. Raise awareness about predatory lending practices, such as high-interest payday loans or subprime auto loans, and advise caution when considering such options. Identity theft. Highlight the risks of identity theft and the importance of safeguarding personal information, regularly monitoring credit reports, and promptly reporting any suspicious activity. Building healthy credit habits and maintaining a solid credit score is a crucial aspect of financial well-being. By practicing responsible credit habits, such as making timely payments, keeping credit utilization low, and avoiding excessive debt, individuals can establish a strong credit history. Setting up payment reminders, automating payments, and regularly reviewing credit reports are effective strategies for managing credit responsibly. It is also important to be aware of potential pitfalls and risks associated with credit, such as credit card debt, predatory lending, and identity theft, and take necessary precautions. With these proactive measures, individuals can maintain a solid credit score, access favorable credit opportunities, and enhance their overall financial health. Section 6. Repairing and rebuilding credit. Offering guidance for individuals with poor credit or a history of financial difficulties to repair and rebuild their credit. Discussing strategies to resolve past credit issues, negotiate with creditors, and establish a positive credit history over time. Highlighting the importance of patience, persistence, and discipline in the credit repair process. For individuals with poor credit or a history of financial difficulties, repairing and rebuilding credit is a crucial step towards improving their financial situation. In this rhythm, we will provide guidance on how to repair and rebuild credit, offering strategies to resolve past credit issues, negotiate with creditors, and establish a positive credit history over time. Emphasizing the importance of patience, persistence, and discipline, we will empower individuals to take control of their credit and work towards a healthier financial future. Assessing the credit situation. Encourage individuals to assess their credit situation and gain a clear understanding of their current credit standing. Obtain credit reports. Advise individuals to obtain their credit reports from major credit bureaus to review their credit history, accounts, and potential areas for improvement. Identify credit issues. Discuss the importance of identifying any negative factors impacting their credit, such as late payments, collections, or high credit utilization. Resolving past credit issues. Offer strategies to address and resolve past credit issues. Payment negotiation. encourage individuals to reach out to creditors to negotiate payment terms, settle outstanding debts, or establish payment plans to address delinquencies. Debt consolidation. Discuss the option of consolidating multiple debts into a single loan or credit account to simplify repayment and potentially lower interest rates. Seeking professional assistance. Advise individuals to seek guidance from credit counseling agencies or reputable credit repair companies for expert advice and assistance. Establishing positive credit history. Provide guidance on establishing a positive credit history over time. Timely payments. Emphasize the importance of making all payments on time to demonstrate responsible financial behavior and build a track record of reliability. Responsible credit utilization. Encourage individuals to keep credit utilization low and avoid maxing out credit cards, as this demonstrates responsible credit management. Gradual credit rebuilding. Highlight the need for patience and persistence, as rebuilding credit takes time. Encourage individuals to start small with secured credit cards or small loans and gradually work towards larger credit opportunities. Practicing good financial habits. Emphasize the importance of practicing good financial habits to support credit repair and rebuilding efforts. Budgeting and savings. Encourage individuals to create a realistic budget, track expenses, and build an emergency fund to avoid financial hardships and late payments. Monitoring credit reports. Stress the importance of regularly monitoring credit reports to track progress. Identify any errors or discrepancies, and ensure accurate reporting. Developing financial discipline. Highlight the significance of developing discipline in managing finances, including avoiding unnecessary debt, making informed financial decisions, and resisting impulsive spending. Repairing and rebuilding credit is a journey that requires patience, persistence, and discipline. By assessing the credit situation, resolving past credit issues, and establishing positive credit history over time, individuals can gradually improve their credit standing. It is essential to practice good financial habits, such as budgeting, savings, and monitoring credit reports, to support the credit repair process. Remember, credit repair is a gradual process, and results may not be immediate. By staying committed to the process and maintaining responsible financial behavior, individuals can rebuild their credit and work towards a brighter financial future.